I bought my first property at age 18. I've bought dozens and dozens of properties since then for myself and for clients. And I've helped my clients achieve 20, 30, 45% capital growth in the space of 18 to 24 months. I'm not an overnight buyer's agent. I didn't find my certificate for a real estate license in the Kellogg's. I'm a degree qualified property investment advisor. I spent 12 years in the financial planning industry and 20 years in the finance industry. And for some reason lately, everyone's been asking me about property in Orange. So I thought I'd do a bit of a deep dive on the Orange property market. Now, it hasn't really come up in any of my data sets when I'm doing research and analysis. And so I was wondering if this was a bit of an outlier, and ultimately I put together this webinar. So here it is. Before we get into it, this is only general in nature. It doesn't constitute financial advice. I'm not telling you to go out and buy property in Orange. Take this content with a grain of salt and understand if investing in property, especially in Orange, is your cup of tea. Otherwise, let me know. I'll refer you to a financial planner, mortgage broker, conveyancer, accountant, pretty much anybody that you need in the who's who of finance and investment landscape. So overall, property in Orange has fallen over the last 3 months. Or look, in terms of fallen, it's 0.1% down at an index level. Over the last 12 months, it's up 8%. So it's relatively meager in comparison to regional locations across the country. In terms of rent, you're looking at around about 575. You're probably looking closer to 600 in terms of what the median rental price is. And rents have risen 3%, which is around about inflation, so nothing staggering. In terms of overall property prices, you can see that property in Orange for the large part of a 15-year period have been relatively stagnant. Between 2018 and 2022, however, there have been some periods of growth and somewhat decline as well. There's that bit of a gully between 2019 and 2020. During lockdown from 2020 to 2022, there was a natural rise in capital growth as a lot of the country experienced as well. And then as we exited lockdown, there was another jump in property prices there as well. However, by and large, property prices over the last few years have experienced some, albeit meager growth, going from a capital value of around about 750 to around about 800. So $50,000 worth of capital growth over the last few years isn't too great. It works out to be roughly 10 to 15%, which is anywhere between 3 and 5% per year on average. In terms of property listings, you can see the drive in property listings, or the trend down property listings, that contributed to some of those capital growth booms that we saw, particularly between 2018 and 2020, and then coming out of COVID as well, the sort of 21, 22. And now you can see that stagnant period here. We are seeing some downward trend in terms of the overall number of property listings. However, the over 180-day mark hasn't seen much of a move. It's more of the newer stock that's moving. In terms of vacancy rates, at the moment, we're sitting at a national average at the moment of 1.1%. So this is in line with what we're seeing at a national average. We're seeing roughly 1.1 to 1.2% nationally. And generally, you'll get some people saying that anything less than a 2% is a good vacancy rate. I like to be below the national average of, I think it's 1.2, 1.3% from memory. So we're just at that. And during COVID, you can see here that we were at dire straits levels of, that would be 0.2, 0.3, 0.4% there. And now we're back up to around 1.1. We are seeing a bit of a trend in the decline of rental vacancies though. And then overall, the rental listings. So rental listings are starting to come down from 2023. You can see that downward trend. There was a couple of trends here. There's a sharp trend in that 6-month period out of 2023. And then there's been a gradual trend there. Overall, properties don't last 30 days at a high level. The majority of properties are gone within 30 days in Orange. Gross rental yield has seen a bit of a hit. You can see gross rental yield has started to come down here. It's gone from mid fives there in 2018 all the way down to around about 4% for both 3-bedroom and the overall housing market at a high level. In terms of weekly rents, have come up from 2018 to 2022, and then they've been relatively stagnant for that period. So you can see that they hover around the 550 mark to 600 roughly. So this is a bit of a case study here in Orange. The median price point for homes at the moment is around about 800,000. So this property is listed at 8 to 850. It's listed at right at the median there. Stamp duty for something like this, you're looking at around about $35,000 for stamp duty and upfront costs. Assuming a rent appraisal of 4%, which is sort of bang on the gross rental yield, you're looking at $615 per week, which is not too far from the medium rental price. Estimated council rates are about $2,200, water of about $800. Landlord and contents, I'm guessing around about 2.5, depending on the location and your insurer and your excess level as well. Assuming a property management cost of 8.8%, they're taking about $60 a week. And then interest only based on an 80% loan to value ratio, we're looking at $3,200 a month at 6% interest. So by far and large, you're looking at about $14,500 a year in deficit. This is pre-tax as well and pre any tax depreciation schedule or anything like that. So you're losing around about $280 per week. So that being said, if you are looking at purchasing in orange, leading indicators don't look too great at a high level, and cash flow, you're going to look to fork out a fair bit. Rental yield isn't that great either. You're looking at around about 4%. So we can definitely do better in terms of overall rental yield. If you do have any questions, please don't hesitate to reach out. I'd love to be able to speak to you more about property in general, let alone property in orange. And as always, please don't hesitate to reach out and subscribe. Do what you got to do. Have a great day.